Hey everyone, it's Al. I'm the founder of Simply Wall Street, and today I'm going to take you through our company reports and teach you how to make the most of them. But just before we start, a couple of little pointers. It's really important to understand that Simply Wall Street is not here to make decisions for you. We are here to help you make the best decisions possible. We don't give you recommendations on what to buy and sell. Our analysis saves you time. It helps you stay consistent, unemotional, unbiased, and focus on the fundamentals of a business. We would not expect you to rely 100% on our research when you make a decision. I'm going to take you through a company report today. Now, Simply Wall Street has a company report on almost every stock in the world. You can find them up here just by going search. So I put Apple, I'll be able to find Apple. The company we're going to look at today is Microsoft. I think most people have heard of it. But you can search for any report you want, any stock you want, and you'll be able to find the report on here. Before we dive into the actual analysis, two things I'm going to point out. The first is here at the top, we have something called last updated. This is important because we reanalyze every company every 24 hours. And so you can actually look here and you can see the date that we last analyzed the company, and you should expect it to be updated fairly recently. Where do we get our data from? So Simply Wall Street actually, we take our data from Standard & Poor's Capital IQ, which is one of the largest data providers in the US. But actually the data that they aggregate is based on two main sources. One is the company financials. Those are the submissions the company makes, things like earnings updates, any forms, any filings, things like that. So that's one of our biggest data sources. But we also have analysts, which we'll talk about in a bit. And actually, if I click here, I can actually see who the analysts are that are covering the company. And we'll talk about the analysts section in a moment. Let's get on to the executive summary. The executive summary is simply a snapshot of all of the information that's in this report. Now, what we're highlighting here is the most interesting stuff for you. So we're picking out the best bits, which will be the rewards. We're picking out the worst bits, or what we call the risks. We actually do 14 risk checks on every company. And if you click here where it says see all risk checks, you can actually see all the checks that we are doing on every company. Now, Microsoft is actually passing most of those. Let's talk about the Snowflake. The Snowflake is something that Simply Wall Street is quite well known for. The Snowflake is simply a visual snapshot of a company. Okay? It's allowing you to really quickly identify what that company looks like. The Snowflake is not trying to say, buy this, sell this, because as investors, different people are looking for different things. The Snowflake is actually made up of 5 axes. Okay, and on each axis we do 6 checks, and we're going to look at some examples of those in a second. Okay, the bigger the snowflake is, the greener it gets. It's as simple as that. But a green snowflake does not mean this is a recommendation, which we already touched on. Now, on all of our visuals, you can actually click beneath them on View Data, and that just shows you the data in a tabular form that's behind the visual. And you can also click Help, which will just give you a bit more explanation into what's going on there, in this case, the snowflake. Okay, let's move on to the first section. This is actually not part of the snowflake, but it's the share price, so it's something that we want to consider. The way we look at share price is in context to the company and the events that have been going on with that company. A company like Microsoft has a lot of events going on, as you can see here. What I can actually do is I can turn off the different categories of these events. Okay, so I've actually just switched them all off there. But let's say I want to just turn on management, for example. So now I can only see management events occurring with Microsoft and how they've been placed in relation to change in the share price. So for example, I can click on one of these, and I can see this was the date that Bill Gates stepped down from the board. Now below the share price, we have market performance. This is just looking at the share price return versus things like the industry that the company is in and the market. And so in this case, Microsoft is primarily a software company, so we're comparing it to the software industry. One thing here that some people find very useful is you really have two types of returns to think about. You have what's called total shareholder return, which includes dividends, and then you just have pure capital gain, which is based on the share price. If I click this toggle, I can actually see what those 1, 3, and 5-year returns would look like if I include dividends. And so for Microsoft, when we include the dividends, you can actually see that makes quite a substantial difference, and the same for the market and the industry. Now let's move on to our first section that's part of the Snowflake, which is valuation. What we're doing in valuation is we're looking at different aspects or different measurements of value for a company. And the biggest one we look at, or the first one, is something that we call fair value. Okay? When we talk about fair value, we use the future cash flows of the business, so how much cash flow and how much money that company is going to make in the future, to come up with an estimate of fair value. Actually, it's not simply Wall Street coming up with a fair value. If we have analyst estimates of cash flows, we'll use those. If we don't have analyst estimates of cash flows, we'll use the company's historical cash flows and extrapolate them. Now, in this case, what you can see is based on those cash flow projections, Microsoft is roughly sitting at about fair value. And you can see that in the checks beneath the visual. The first one being below fair value, and that would turn green if this calculation of fair value had been above the share price. And then another one which accounts for 20% margin, right? So significantly below fair value. And if you find other stocks, you'll find that sometimes these will turn green. Again, if you want to see the calculations behind this and how that number's been calculated, you can just click on View Data. This is something called a discounted cash flow. I'm not going to have time to go through that calculation in detail now, but we have a lot of information if you'd like to learn more about that. And so this is a fair value, which should be considered an intrinsic valuation based on cash flows. But if we keep going down, we can see what we would call relative valuation. And the first one we look at is PE ratio, or price to earnings ratio. What we can see here is that Microsoft has a PE ratio of 35, and the industry has a PE ratio of actually 52. So there's quite a big difference there, and as an investor, that's something that I would certainly want to look into. Again, if I want to understand how did that PE ratio of 35, how is that calculated, I can click on View Data, and I can actually look at the calculation that we use to come up with that PE ratio. Things like PE ratio, PEG ratio, which we have down here, there's lots of different ways of calculating them, so you need to be very careful about that. It's a great reason to use Simply Wall Street because our approach is always consistent, so you can always compare these ratios between different companies. Just finishing off this section, we have something called PEG ratio, which accounts for growth in the valuation, and generally a PEG ratio below 1 is where something could be considered good value. We have price to book ratio, which compares the price of the stock to its book value or its assets. And just a small thing I'm going to point out for you is at the bottom of each section, you have something called next steps. I'm not going to click on it because we're going to stay on the report, but next steps allows you to explore other companies in that same industry, in this case software, that might also be undervalued based on the same analysis that we've just been through. And this is probably a good time just to remind you about, at the top of each section, you have a summary of the checks that we're doing that are included in the Snowflake. And so the same in the valuation section up here, I can see these checks. Here are the same ones that are included in that axis of the Snowflake. And so that's quite straightforward. You can either hover over them here, or you can discover them in the main section of the report. Let's move on to future growth. So what are we doing in future growth? What are we looking at here? We are looking at the forecasts for the company based on the consensus of the analysts. And you can see in the case of Microsoft, we have 31 analysts who have submitted forecasts for this company. And how can we explore those? So in this first chart here, what we're looking at is actually the consensus estimates of revenue or sales and earnings, or some people could call it profit, but we'll call it revenue and earnings for now. As I hover over this chart, I can actually look for each year the estimates or the forecasts of what the analysts expect there. So for example, let's look at, in this one we've got 2022. We can see that there's 27 analysts who've submitted estimates of revenue for that year and 20 analysts that have submitted estimates of earnings. And then next to it, I can actually see the date that those estimates were last either revised or confirmed. And actually what you'll notice is as you look at different periods, that date will change. On all of these types of charts, which we would call time series, on all these types of charts, you can actually toggle on and off different series. So for example, if I just want to look at, say, the earnings, I can turn off the revenue, and I can just have a look at what the analysts are expecting for earnings. I can also turn on something like free cash flow, right? Now, if you are paying attention, the free cash flow you see here is the same free cash flow that we are using if I go back to the valuation section here for this calculation. So that's how the two are related, and that's important to understand. So now I'm back here. I can toggle different series if I want, and that makes it quite straightforward to explore the chart. So beneath here, what we're doing is we are now looking at what do those growth rates look like, because this is the detail, right? This is year by year. But what we actually want to look at here is what does that look like in terms of a growth rate? And the growth rates are very powerful because it allows you to compare it easily to other companies and other industries. And the two growth rates that we look at are the earnings growth rate and the revenue growth rate. And then we compare it, as you can see here, to the industry and to the market. And if you hover over those, you'll actually see what, just to confirm what those are. These are the Snowflake checks that we've talked about. So a lot of those relate to those rates. And then beneath that, we actually look at earnings per share, which of course, generally speaking, is the same as earnings. But when you account for the per share portion, that can sometimes be a bit different. And one thing that we do in this visual is that we actually show the range of the estimates, because remember, we're using consensus data here. We're using, say in this case, 30 analysts are submitting estimates. So some analysts will have higher estimates, some analysts will have lower. And in this visual here, you can actually see the range of those estimates. You can also go back in time and see what the analysts thought was going to happen 3 years ago, and that's quite powerful as well. In this case, actually, it looks like quite a tight range, but that sometimes can be quite divergent from what actually occurred. Final part of this section, we have the analysts who actually submit forecasts of return on equity. Return on equity is a great metric to use in your investing in the future. So we're looking at return on equity in 3 years' time. And separately in a bit, we'll look at return on equity, what it is at the moment. And that's really powerful to look at as well. So 37.2% return on equity, that's very healthy. Again, next steps here, same thing. So if I want to find other companies within the software industry that are looking like high growth based on the metrics that we just looked at, I can click here and I can discover those companies. Now the past section, which is section 5, is similar to the section on future, but it's looking historically, it's looking back. And so this first chart is simply the history of earnings and revenue. Okay, so as I go back in time, I can go back and I can see, okay, back in 2015, what was the revenue Microsoft was doing? Well, you can see it's 93 billion. Again, remember, I can turn on and off different series here, and that's very powerful. So for example, if I just wanted to compare, say, revenue to operating expenses, I can do that. And the same thing, you can see underneath each chart, we have our Snowflake checks. In this case, we're looking at the earnings that the company is reporting. Are there any one-off items that might be impacting those? And what we look for here is that we actually look for growing profit margins. In this case, Microsoft is failing that check. Similar to the future section, what we do here is we look at the growth rate. So above, we looked at the actual year-by-year changes in earnings, but now we're looking at the growth rate. And then we split that into two sections. First one here, we have what's the average been over the last 5 years? So I should say past 5 years. And what was it this year? And that's very powerful because you can actually compare the two. You can see, actually on average, over the past 5 years, Microsoft has been growing incredibly fast. And in this year, recently, it's actually slowed down. So it allows you to get a good snapshot of how that company's been performing. And those are the same numbers that we use in the analysis that goes into the Snowflake. Finally, similar to the future section, we have return on equity, but this is the current return on equity based on the most recent results. And we have two other measures of return that are commonly used, which is return on assets and return on capital employed. Let's look at financial health. So our financial health section is all about the balance sheet. It's all about, is the company in a good financial position? And to start off in that section, what we actually look for is we just look at the two sides of the balance sheet, which is the assets and the liabilities. And we broke those out into short-term and long-term. And what we actually look for in our Snowflake checks here is coverage. We look for the short-term assets covering the long-term, sorry, the short-term assets covering the short-term liabilities, and we look for the short-term assets covering the long-term liabilities, which is quite a conservative check, but some companies are able to achieve that. And the final section here is all about debt. Now, lots of companies have debt. That's very normal. What we actually really look for is not just the level of debt, but we look for, is the debt well covered? Is it under control? Is it something that you should be concerned about? And so what we can actually see here is that, first of all, Microsoft does have some debt. It's actually been reducing that level since 2018, but compared to, say, 2014, the debt level is still quite a lot higher. And for that reason, you can see in our Snowflake checks that it fails the first one, it fails the second one, which is all about has it been increasing or decreasing, but the coverage of the debt is actually looking quite good, which is to do with, is it covered by operating cash flow, and are interest payments on the debt well covered? To finish off this section, we visualize the balance sheet. And this is, again, this is a very simple way of getting a snapshot and how that looks. If debt has been flagged above, it will be turned red here. This is a very easy way to view what a company's balance sheet is looking like. This is our last Snowflake section of the report. And there's still more sections. So the last Snowflake section is all about dividends. Okay? And I guess the headline number that most people who invest in companies that pay dividends should care about is the yield. What's the current yield? And we'll look in a bit, what's the forecast yield? What could the yield be in the future? Interestingly, Microsoft has actually announced that they have an upcoming payment. And so you can use this visual to actually see how long you have if you're thinking of becoming a shareholder to purchase that stock to be eligible for that payment. And what we're doing here in 7.2 is we're comparing the yield, right, so the dividend yield of the company, to the rest of the market and actually to the industry. And this is really one of the areas that Microsoft is failing on our checks is, yes, they pay a dividend of 1%, but there's better companies out there that pay a higher dividend than that. So that's why it's failing these two checks here, that we compare it to the rest of the market. These are actually percentiles. So we look for the 25th percentile and what we call top 25%, or it could also be called the 75th percentile. But when you look at dividend companies, the two areas that you want to be looking at are the payments stable, and hopefully the payments have been growing. And so this chart is a great way to explore that. I'm actually going to turn off the dividend yield series, and I'm just going to look at the dividends per share. And here you can see historically Microsoft obviously has been growing the dividend per share payments, but they've never missed a payment. We can also go forward and we can see what the analysts are forecasting there. And so because the payments are stable and because they've been growing, Microsoft is passing those two Snowflake checks. Now on this chart, you can also switch on earnings per share, which is quite interesting because earnings per share and dividend per share are related. And that is what we're capturing here, which is called payout ratio. So payout ratio is simply how much the company earns and how much is it paying to its shareholders. And you can see here that Microsoft is paying 35% of its earnings out as a dividend. So it's a very affordable dividend, so it doesn't have to worry about that. And then we do the same thing, but we look at that 3 years in the future. So we use those analyst forecasts of earnings per share and of the dividends to see where that number might sit in the future. And if you're considering purchasing a company for its dividend payments, this is something that you really want to look at. Now that was the last section on the Snowflake. So remember, the Snowflake has 5 axes, but we actually have 2 other sections that are really important to look at as an investor. And the first one is management, right? Who's running the company and are they the right people? So when we look at management, we start off by looking at the CEO and we look at compensation. This is a very important thing to consider, is the compensation of the CEO well aligned to the shareholders? And we can see how the compensation of the CEO has changed over time compared to the earnings of the company. That's a very simple check. One of the other checks we do down here is we look at the compensation compared to other similar sized companies by market cap, and we see if it's within a reasonable range. Interestingly, in this case, it seems a bit higher. Now, everyone says when you're researching a stock, when you're thinking of buying one, you've got to look at the management team, but that's actually quite challenging to do because as the management team is huge, there's a lot of people to look at. We make it very easy for you because in this table here, I can see the entire team, I can see their position, I can see how long they've been at the company, I can see how much they're being paid, their compensation, which by the way includes options and their salary, and I can actually see how much they own. Now a large company like Microsoft, you generally wouldn't expect the leadership team to have huge ownership stakes, but if you look at some smaller stocks, you would expect to see those numbers be much higher. What I can do is I can click on View Profile here next to the name, and I can actually, for every person, I can read a biography. So I can look at their background, how they got into that position, what their experience is, and I can see that same data that we saw on the table. So what is their ownership of the company? Now that's the leadership team, and we also summarize what the average tenure has been. So is it quite a new team, or have they been there for a long time, and what the average age is? But then we do the same thing for the board. Now, obviously in some companies, a lot of the leadership team are on the board, but in this case, most of them are independent. So the same thing with the board. I can dive in, I can see the compensation on the board, I can also see their ownership stake, so that's very powerful. So the final section that we have for analysis is ownership, and we look at two big areas here. One is insider trading. With Simply Wall Street, there's only one type of insider trading that we focus on, and that is what we call open market trades, okay? And there's lots and lots of different types of insider trading where they can do transactions that might be pre-scheduled, they might be part of their compensation package, but meaningful insider trading, what we look at is when it's an open market trade. So it's something that they've elected to do, and those are much more meaningful. And Microsoft, what we can see here is in the period of the last 3 months, 3 to 6 months, 6 to 9 months, and 9 to 12, so we're going back a whole year, we can see that actually there's been only sells, which is interesting. And if we go down, what we can see is the individual transactions. So we can actually look at how much, what was the transaction value, who was the insider who was making the transaction, and you can hover over these icons to even see their role. And so that's how you can actually see the detail that is in the visual above. Finally, in ownership, we have ownership breakdown, which is like a summary of who owns that company, which is very powerful, very useful to look at. In Microsoft's case, we see 72% institutional ownership, 26% general public, and this is a great way to look at, the who owns the company can have a big impact on how the shareholders react to news and how they think about that company. Now, obviously, with larger companies, you'll see in a bit, they generally enter indices, and when you enter an indice, like say the S&P 500, then lots of ETFs will be buying you, and your institutional ownership will often go up. And if you go down to this section, top shareholders, what we're really looking at here is who are the top 25 shareholders of that company. So like I said, in Microsoft, it's not surprising to see people like Vanguard, BlackRock, effectively the ETF providers, being high on that list. But if I look here, I can actually see Bill Gates, so he's obviously in the top 25, although as we saw earlier, he recently left the board. And one thing to notice here that's quite powerful is we can look at the change. Change simply means for that shareholder in that last reporting period, how much did their holding go up or down, and that can be quite useful to know. Final section, promise, keep this video short. It's just company information. There's a few things that are useful here. So one part is looking at the number of employees, just to seeing if that's been going up or down. If a business is hiring, that usually can be a good sign. We have the listings. Obviously, Microsoft is listed on many exchanges all over the world. This can be really powerful if you do want to see if there's a local listing of a company that you might want to invest in. And the final section I'm going to highlight for you is this one. And what we're showing here is we're just showing when have the different data sets been updated? We use end of day share prices at Simply Wall Street. So you can see here when they last came in. You can see when the last earnings update was and when the last annual report was. So this one here would be quarterly. And then, like I said, we update these reports daily, so you'd be able to see that exact time here when we last updated that report. Okay, I'm going to be making some other videos that I'd love you to check out on building a portfolio and also screening for stocks and discovering new investment ideas. So take a look at those videos, and thanks for listening.